Income taxes in retirement can be a source of stress, particularly for new retirees. While we're working, our employers tend to do a pretty good job of calculating how much tax we should be paying, and they withhold that from our paychecks. But when we're retired, we're getting income from lots of different sources, including private pensions, old age security, Canada pension plans, withdrawals from our investment accounts, including RRSPs, RIFs, non-registered accounts. And getting that income tax bill correct can be really tricky, particularly at the beginning portion of retirement. In this video, I'm going to talk about things you can do to make sure that particularly the government, or Service Canada in this case, is withholding the correct amount of income tax from your Canada pension plan and old age security benefits. And if we haven't met yet, my name is Mark Walhout. I run an investment advisory and financial planning business called Walhout Financial. I help people with retirement, and I created this channel to share ideas and concepts that I'm using with my clients every single day. If you want to get more videos like these, consider subscribing to the channel using the button below. If you like this video, give it a thumbs up. And if you have any questions or comments, drop them in the comment section below. I'm pretty quick to respond to questions that I get on the channel. And your questions actually give me really good ideas for videos that might be interesting in the future. So absolutely drop a question or comment in that section below. So what we're going to do is I'm going to walk through a hypothetical couple's tax return, and we're going to talk about the issue that they experienced at tax time. And this is a tool at taxtips.ca. You can use this tool yourself. And I've just created a very simple tax return for a hypothetical couple. They're 65 years old. They live in Ontario, and they're just beginning retirement. And we're going to go through a few lines. I'm going to move around the page a little bit here, but what I really want you to take away from this is sort of the result, and I welcome you and encourage you to try out this tool on your own. I use this in my practice most days just to do really simple income tax projections. It's a fantastic tool. So our hypothetical 65-year-old couple, they're getting each $7,000 per year from old age security. They're each getting $1,000 per month or $12,000 per year from Canada pension plan, and they're also taking $20,000 each from their RIF accounts, okay? And so what they've done is they never told anything, or they never indicated anything to Service Canada regarding income tax withholding on their Canada pension and old age security payments, but they did instruct their financial institution to withhold taxes from their RIF accounts. And I know I'm running through this thing pretty quickly. Sorry about this if it's tough on the eyes, but the only withholding tax that they instructed their financial institution to take was $2,000 of withholding on their RIF withdrawals throughout the year. And this now puts them in a situation where they get to the end of their tax year, they've submitted their tax returns or their information to their tax preparer, and then they get that email from their return preparer saying that they owe taxes. And they have this moment, they're like, oh my goodness, I've never owed income taxes. There must be something wrong with my tax preparer. What did I do wrong? And the reality is that you simply just didn't withhold enough taxes. Your tax bill is what it is. It wouldn't have changed whether you got the withholding correct or didn't get it correct. But unfortunately, in this case, this retiree couple, since the only withholding tax they paid was on those RIF withdrawals, they each owe $1,486 in income taxes for a total tax bill payable of $2,971 over and above what they paid. So their total tax bill is just under $7,000. They only paid $4,000 between the two of them. And the culprit here is that they didn't make the appropriate withholding from their Canada pension plan and old age security benefits. And now I'm on the Government of Canada website where it talks about CPP retirement pension, specifically after you retire. And it talks about taxes. And now we're talking about CPP only, but the same thing applies to old age security. The pension counts as taxable income, but taxes aren't automatically deducted. So now you have to go in and manually request that Service Canada deduct a certain amount of income taxes from your CPP and old age security benefits. And you can find that form here. And it's a fairly simple form. I've got it right here, and I'm going to show it to you. You simply fill in your information, and very simply, you just include details that you'll submit to Service Canada for how much income tax you'd like to have withheld. And if you think that your income tax withholding is going to be fairly consistent year to year, you could put in a value, like you could simply put in the value of income tax owing. In this hypothetical retiree's case, they could just put in the dollar value. But since incomes will go up with inflation, tax rates may change. Generally, I would advise just sort of choosing a percentage and having it go in here. So in this particular retiree's case, they could go 10%. They could go maybe a little bit higher, even 15% to account for any overages or additional income sources that might layer in later on. But at very least, they'll avoid that big income tax surprise when they get to tax time next year and they're filling in their tax returns with their tax preparer. So this is just a really simple thing you can do. The form is pretty easy to fill out. Help avoid that income tax surprise. If you're working with an advisor, they can sort of help run these tax projections for you and help you determine what's the right amount of withholding to take from CPP and old age security. And by the way, the same thing can be done with private pensions. It can be done with withdrawals from your investment accounts. Let your advisor know or work with your advisor to figure out what your income tax bills should look like this year and in the coming years, and determine what the correct amount of withholding should be for withdrawals. And you can go ahead and make those upfront if you want. If you are okay paying a tax bill at tax time, then you can withhold less. But generally, I try to advise people to have that tax bill line up with the amount of withholding wherever possible. It helps avoid a lot of other issues. A, it avoids that tax surprise, but B, it kind of gets you around a scenario where you're having to make income tax installments, which can be stressful, and they can end up costing you if you don't manage them correctly over the course of your retirement. Now I'm kind of digging into different rabbit holes. So if you have questions about income tax installments and retirements, just hit the like button to this video and drop me a comment. Say, you know what, Mark, I'd like to learn more about the impact of having to pay income tax installments, and I can do a video on that. But hopefully you found this video helpful. The links to the tools that I've talked about in this video are going to be in the comment section below, in the description section. Again, questions or comments, you can drop them below. Hit the like button if you like this video. Hit the subscribe button to get more videos like these sent to your feed. And until next time, hope you have a fantastic rest of your day, and I'll speak with you soon. Take care.